Hi, Don. I see you in the house. Looking forward to hearing your voice and seeing your screen. I'm making you the presenter. This is my first interview with Don Meade. Welcome to F.A.C.E, Don. I hear you. I see.
Oh, you can hear me. You hear me okay?
Yeah, Don. Yeah, I could hear you. I could see. Yeah, it's so great to meet you, Don. Thank you so much. Yeah, thanks for taking the time to be with us today in our community. And I'd like to start with why the icon of Andy Kaufman doing Elvis for your Twitter icon.
Well, first of all, I want to thank you, Dale, for the honor of having me on here. I've followed your work for years and have really appreciated it.
Oh, thank you so much, Don. So
Andy Kaufman to me is kind of a metaphor for the market itself, if you can believe that.
In what way?
Well, I've always felt that the market's main purpose is to deceive.
Okay. All right.
It's the main purpose of the market is to keep you off balance, to keep you from understanding what's really going on. And Andy Kaufman was a master at that.
He was.
So,
how about it reminds you of when you're right and you ring the register, you say, "Thank you very much."
Right,
Andy. So. Yeah, someone already said that. So, Don, you know, I like to go back in time machines with people. I know you're a veteran, and I'm interested in how things started for you that drew you into this deceptive, trying to figure out code in the markets and directionality. How did your journey begin? Did you have a mentor, or what influences did you have?
Yes, Dale. My journey began when I was still in college. I was a psychology major. I had about a year to go before I would graduate with a degree in psychology. And I worked my way through college, and I happened to get a job in the evenings with Merrill Lynch. And my job at Merrill Lynch was to just keep track of all their supplies and order new supplies as they were required. And then later on, that went to the next thing I did for them was to take all the confirmations of transactions that came in every day and tear them apart and put them in envelopes and send them out. And ultimately, I became not ultimately, but along the way, then I became the margin clerk for the Portland, Oregon office of Merrill Lynch.
Yeah, good. That's good trainings.
Right. And as a margin clerk, you know, I saw what was going on with all these accounts, especially the active trading accounts, and it just hooked me, totally hooked me. I became fascinated, and I, of course, was talking to, they had 50 brokers at the time, and I would be talking to the brokers every day and figuring out what they're doing and why they're doing it. And then I began studying charts, studying everything I could get my hands on, reading everything I could get my hands on.
Let me guess. Did you read Technical Analysis of Stock Trends by Edwards and McGee?
Oh, you betcha.
Was it your Bible?
List, along with, of course, all of Jesse Livermore's writings.
Right. Okay. So, and technically, I see you use candlesticks. Did Steve Neeson, the use of sticks, was it him that had you gravitate?
No, actually, I've never been a big follower of candlestick patterns. I just like them because at a glance, I can see exactly what the market did in any particular time period. I think they're much more descriptive than other forms of chart patterns or chart, demonstrations.
Well, you know what? You had a great advantage coming up in a brokerage firm, being surrounded by, even though most brokers are just salesmen, I'm sure there was a lot of trading talent that you got in, that you rubbed elbows with at Merrill. And, you know, compared to
what happened was that I became so hooked on the market that I added to my academic curriculum economics, and ended up getting degrees in both psychology and economics.
Cool.
And about a year
after you realized neither of them applied to trading, what did you do then?
Well, I think
I'm kidding.
I think psychology does.
Yeah, exactly.
I've always said that of the economics and the psychology is a far more valuable of the two when it comes to trading.
I agree. They say like real estate's location, location, location. Trading is psychology. So what was one of your biggest hurdles to overcome psychologically in trading? For me, it was having.
I will add, I became a broker with Merrill Lynch back in the early 70s.
Okay.
And so I had a 20-year career as a broker.
Okay. All right.
But anyway, your question was obstacles?
Yeah, you know, what was a hurdle psychologically? Like, I know everyone knows their strengths and weaknesses. You know, one of my weaknesses is being able to stay with a trade until my target's hit. The way I overcome it is by taking a piece off and staying with something. Some people, the most difficult thing is to accept a loss and take it. And then for them not to dwell and get into fetal positions, but have the attitude of, that's just the nature of the business, next. What was it for you?
I think probably it would be just being too early. As I would do my analysis, I would see something developing, but I would always be there too early.
Okay.
And I think the obstacle I had to overcome was just having the faith and the patience to stick with something when I knew I was right.
Okay, good. That's great. So, you know, that's my tendency too. So trade selection is important, especially if you have a tendency for being early. Do you make your trade selections, you know, by having some measure that says you have relative weakness and you're short the relative weakness, so even if it carries on, it's more forgiving than if you short the relative strength that's, you know, becoming parabolic, or vice versa on the long side. Yeah. So, you know, that goes back to the old IBD days, right, Don?
Yes, that's right. But you know, where I think my philosophy that I've developed over the years is a little bit different than a lot of things I see on Twitter and various trader boards, is that I don't look at trades as isolated events. I don't look at a particular day in the market as an isolated event. I look at markets as a continuum. Livermore said that there isn't a bull side to the market or a bear side to the market. There's only the right side. And that just really clicked with me, because if you identify the right side to begin with, then trading sort of becomes, it becomes a whole lot easier, we'll put it that way. If you are right on the trend, you can make a lot of mistakes and still come out okay. But if you are wrong on the trend, you can trade perfectly and still get hurt. Right. So to me, it's all about identifying the direction of the market, not setting up trades and figuring out entry points and exit points. It's all about identifying the direction of the market.
Okay, so we're here we are with the Dow pushing new highs. Steve was talking 9 days up in a row, but I see you showing the XIV, which is the reverse of the VIX derivative, and you have a key reverse.
Now you're able to see just what's on my screen, is that right?
That's right. I see the peak in ADL. I see the S&P along with the XIV.
Let me Well, okay, let's start there. Yesterday, as we see on this chart, the Dow Jones Industrial Average closed at a new high,
Yes.
new all-time high where the arrow is. Standard & Poor's closed at an all-time high where the arrow is. But now let's scroll down and take a look at things like the advanced decline line. Can you see on the screen now
Yes.
where it peaked about 5 days ago, where that arrow is?
That's
The next one is, yes, the next one is the advanced decline volume line.
peaked even
It peaked
earlier.
2 weeks ago.
Okay.
Next, we have the NASDAQ composite. It peaked, I don't know, 8 sessions ago with a key reversal, by the way. Here is the McClellan oscillator. It peaked a month ago at about a plus 37 level and closed yesterday, and this is key to me. When the Dow Jones Industrial Average closed at an all-time high and the Standard & Poor's average closed at an all-time high, the McClellan oscillator yesterday was minus 17.
So you're getting all these non-confirmations, and you put a lot of weight on the McClellan oscillator.
Absolutely.
Okay, how about the summation, McClellan summation index? That's the other part of it. Is not so much.
Oh yeah, very definitely. In fact, why don't I don't want to go beyond my allotted time here, but let me.
Don't worry about it, Don.
Okay.
Don't worry about it. It's my show. It's my show. I'm going to be, you have as long as you need to, share whatever you want to share. And I appreciate you bringing, proprietary type stuff that you're using and sharing it with the community.
Absolutely.
Shows me you're a giving spirit.
I appreciate the you giving me the opportunity to do so, Dale. Speaking of proprietary data, let's just take a look at what I call the 7 sentinels. I mentioned a few minutes ago that I'm interested in the direction of the market. I'm not interested in setting up a trade and figuring out the entry point and exit point. I'm interested in being in sync with the direction of the market. One of the something I developed a few years ago for identifying and knowing at any given time what that direction is are the 7 sentinels. Let me just
Therefore, your handle and the name of your website. So the sentinels are different market measures.
Yes.
Okay.
There are 7. What I do is this. I have come up with 7 things that measure the trend of the market, and my 7 sentinels works thusly. When all 7 go to buy at the same time, or uptrend at the same time, that gives me a buy signal in the market. The trend is then up. That trend will stay up until all 7 go to downtrend at the same time, at which time I get a sell signal. I can go through what the 7 are real quickly here. And you rightly pointed to the fact that I place a lot of weight on the McClellan oscillator, and I will show you in a moment that also I use the summation. But here is the New York Stock Exchange McClellan oscillator, NYMO by symbol. You can see the lines right here.
Yeah, the cross.
Okay. What you're looking at is the 13-day moving average and the 34-day moving average of NYMO.
Okay.
Those crossed negative about a week ago.
Okay.
The 13 crossed below the 34. So that sentinel is on downtrend.
Okay.
Now let's look at the McClellan for NASDAQ. Here again, we see the 13-day average of the NASDAQ McClellan, or NAMO, crossed below the 34 about 2 weeks ago. That sentinel is on downtrend. Here is the summation index for the New York Stock Exchange. And here I just use the daily versus the 2-day moving average to find the direction of the summation. And you can see that the 2-day, the single day today is below the 2-day, so the trend is down. That sentinel is on downtrend. Then we go to the same thing for the summation for the NASDAQ. That's been on downtrend actually for about a month now. You wouldn't know it from the way that the NASDAQ stocks are acting, but it has been.
Well, unless you're long Amazon from the high.
Right, exactly.
Yeah, go ahead, buddy.
Okay, next, so that's 4 sentinels that are on downtrend. The next thing I look at is the BP Comp Q, which is, I don't want to take a lot of time with the technical there, but it is how many of the NASDAQ stocks are producing buy signals using point and figure charts. But anyway, I chart again the 13 versus the 34 moving averages. And when the 13 crosses below the 34, that produces a sell. You can see that just produced a sell yesterday. Okay. Sentinel number 5 is on sell.
Okay.
The next is the trend, and because trend is an inverse indicator, I divide the trend into the standard and the SPY, SPY. Okay. Again, using the 1334s, when the 13 is above the 34, that's uptrend mode. It is still on uptrend mode as of yesterday. So sentinel number 6 is on uptrend. And finally, I use XIV, which is the inverse of VIX, because again, I want to use an indicator that is a positive indicator rather than a negative indicator. So with a look at the chart, you can see what's happening. Again, 1334s, the 13-day is above the 34. This is the most stubborn of the 7 sentinels. It is still going up. So what we have is 5 sentinels.
7. You have 6 out of 7.
Yes.
Confirming the same direction.
No, actually 5 out of 7.
5.
We have 5 going up. I mean, 5 going down, 2 going up. Now, I wanted to see if I can get quickly what the signals have been over the last year. I have that chart. Darn. Right here. Okay. Here is the last 15 months. And here's what the 7 sentinels indicators have done. The last time they gave a sell signal was in August of 2014. So the 7 sentinels were in downtrend. The market was then in downtrend until about the time of the election.
Exactly.
Right after the election, we got a buy signal, 7 sentinels buy signal. That means the market is in uptrend. It has stayed in uptrend now since that time. And as we just looked, Dale, 5 are on down, 2 are on up. That means that we are still up. We will still be up until we get 7 down at the same time. That hasn't happened since the election. We're very close now.
Okay. So is that what you're saying? What was a signal that you've only gotten 4 times in 52 years?
Okay, this one is much more complicated, but let's go through it. What you're looking at is for the last 4 years, what this particular signal, the sell signals that this particular signal has given. If we went back 52 years to 1964, about the time that the Ford Mustang hit the scene, as we remember, I'm sure.
Yes.
there have only been, well, let me put it this way. Between 1964 and 2013, there were none of these signals. Since 2013, there have been 4. So in that entire 52-year period, there have been only 4. What the signal is a measure of the 5-day moving average of net upside volume as the Dow Jones Industrial Average makes a new high. Here is the exact definition of the signal. When the Dow Jones Industrial Average makes a new high, and on the same day, the 5-day moving average of net upside volume is more negative than -1.5%. That gives a signal.
So I assume a lot of back testing to come up with these parameters.
Yes.
Okay.
Yes.
Mm-hmm. Interesting.
It's happened 4 times. The 4 times were, well, let's see.
So it didn't happen in, you didn't get a signal like that in the financial crisis, the Great Recession, which wasn't so great for me. I don't know about you. Because you're covering all these years, so that means that you didn't get these signals in the previous 2 bubbles. And
that's true. That is true.
Okay.
So this is not a signal that I depend on as something I wait for to happen, and then I know that it's time to sell. It is something that is very rare, and when it occurs, it puts me on high alert. And it has now put me on a very high alert to watch those 7 sentinels to see the last 2 fall into place and get a sell signal, or very close to that.
Okay.
Here are those 4 signals. The first one occurred on September 19th, 2014. You see where it is, and you see what followed.
Nice.
Here's the next one on July 20, 2015. You see where it occurred with the vertical line. You see what followed.
No heat on either of them.
Pardon me?
The first 2 was almost immediate gratification. Here you had to sit through this next one you had to sit through a gap up.
Yes, I'll tell you what that gap up was. We all remember it well. It was the what is often referred to as the State of the Union message.
Oh, okay. Yeah.
Otherwise known as a joint sessions speech.
Right.
So after that signal, the market stalled for 2 days, then that speech, and then it went down for the next 3 months.
Okay.
Or I should say that was the high then for the next 3 months. And then, boom.
And now?
Where is it? It's here. It occurred Thursday.
Okay.
There it is. It occurred again on Thursday, August 3rd. Whoop, I'm sorry. Well, anyway, you get the point.
No, you know what? First of all, I know that we're kindred spirits because I think you and I are the only ones on the planet that still use an AOL email address.
Okay, yeah.
And second of all, why don't you show your website now, Don? And tell us about your business model. Do you have subscriptions, or what do you market to the retail trading public?
Right. Let's take a look here, see if it'll pop up the way it's supposed to.
I thought I saw it when you were running through things.
There it is.
There you go.
There's the 7 Sentinels website. It is a subscription service. I comment every night, and then a weekly comment every Sunday, and then 4 times during the day, I update what's going on that day and how it relates to all of the trend indicators that I'm following. By the way, the 7 Sentinels, the daily that I showed you, is my main trend indicator, but I also do it on a 2-hour and a 1-hour basis rather than just daily. So we have a lot of things that we're looking at for trend. But anyway, so I publish, 75 times a week, I guess. It keeps me busy.
Okay.
If anybody is interested, we are.
You got a nice trial going for $9.95.
Oh yeah, you saw that. Okay. And that's for people that follow us on Twitter. And by the way, on Twitter, I update even.
So you have a private Twitter feed for subscribers.
Pardon me?
You have a private Twitter feed for subscribers?
Well, what happens is every time I put up my comment, my intraday comment, what you'll see is, well, at any rate, I put the link on Twitter. Now, if you click on that link, if you're a subscriber, it takes you right into the comment. If you're not a subscriber, it takes you to a page that explains the information that I put out on Twitter, like every hour or so.
What a skilled marketer you are.
Oh, thank you, Dale.
So I'll tell you, at this time where we're at in the market, let's call it Providence that you were here, maybe.
I thought about that very thing. What a perfect time. You and I scheduled this a couple of months ago for August 8th. And you could not have, had you
I knew.
A crystal ball or any other method. No.
They don't call me no Dale Pinkert for nothing, Don. So, I knew you were going to have your forced signal in 52 years today. I had it on, it came to me while I was sitting in my pyramid with my 10-foot hat on.
The other thing that makes this day so special was yesterday was the first day that the S&P closed at a new high with absolutely every single broad market indicator and internal indicator non-confirming. That was the last
no follow through today. Yeah.
Right.
All right. Well, Don, it really was great. I'm so glad I reached out to you. Thank you for volunteering and having a giving spirit to share an important piece of analysis. We could tell by your voice that, you're a veteran. Okay. and sharing your story, about what you did at Merrill Lynch. It was a great interview. I'm so glad that we finally got to meet, and I hope we could follow this up down the road and see what sentinels are standing up and which sentinels are laying down. So,
okay. Well, thank you so much, Dale. I really appreciate the work that you do with F.A.C.E. and for giving me this opportunity and just keep on doing what you do because it's terrific.
Thank you so much, my trading warrior brother. Everyone thank Don Meade. You can follow him at 7 Sentinels. Go to his website and let's see how things play out. Thank you very much, Don. Thank you very much, F.A.C.E. Enjoy your summer day, and we'll be back tomorrow. So most of all, Don, this is how I close my show. Don't just count your pips, count your blessings. And I'll see everyone tomorrow.
Thank you.
Thanks again, Don. Thank you, F.A.C.E. Thank you, Lucas, Simon, Thomas, Didier. See everyone tomorrow. Thank you, Blake. Thank you, Steve. Thank you, Nick. Thank you, Grega. Thank you, Stelios. Happy birthday, buddy.